So I slam on my brakes and I kiss the bumper. And no damage. It was a taxi. So there's scrapes all over it. We pull over into the parking lot, and he looks at it and I look at it, and I'm young. I'm like 20 years old when this happened. And I've been told, always give your insurance info. So he said, no problem. I said, okay, well, here's my insurance information just in case your boss or something like claims it's a scrape or something. That day I get a call from my insurance people saying that he claimed that he had to go to the hospital and there was like $10,000 worth of medical bills, and they paid it. They paid it. And this guy was perfectly fine.
All right, so welcome to the Money Alchemist podcast. I'm your host, Brent Gargano.
And I'm Ben Jones.
And we are here with a friend of mine, Sean Cohen. And Sean actually is an insurance agent. He owns S. Cohen Insurance, which is a property and casualty insurance firm here in the Cincinnati, Ohio area. And we brought Sean in because there's so much going on in the world these days related to insurance. I mean, we've seen flooding in the Carolinas. We've seen more recently, we've seen wildfires in California. I don't think it's lost on anybody that insurance premiums are going up. And so it just seems like such a ripe moment to have this conversation about property and casualty insurance. So anyway, welcome, Sean. We're glad to have you.
Thank you, Brent.
First question we have is pertaining to your career path. Like, how did you get into this? Tell us a little bit about your firm, where you started, how that developed into, I think you own the business, right? S. Cohen Insurance, is that right?
Name's on the door, so
Yep.
I hope so. I joke a lot of times, and it's a joke I heard before I got an insurance, is everybody in insurance never meant to get into insurance. And it was fortuitous because my grandfather owned an Allstate agency. My brother owns an independent agency in Nashville. My father did workers' comp insurance law. A lot of people in the insurance business in my family. I married a wife who had a mother-in-law who worked in an independent insurance agency. Her grandfather was an agent. It's just, I guess it runs in somebody's blood somehow, and it just can't get out of me. So I moved to the Cincinnati area in 2013, took a job at a glazing glass company. It didn't work. Guy my brother knew was in insurance, recruited me. Like, yeah, let's try it. Tried it, loved it, crazy. Like,
let me get this straight back up a second. You loved insurance.
Yeah, it was every other day.
It must be in his DNA.
I guess. I guess. I love helping people, and it's harder in this time. It gets a lot harder to do, but I still love it. It is every other day. Some days I'm like, I hate. It's like the people are really just feeling stressed about things, and I carry that a lot for the customer as well. Being a consumer and feeling that they are aggravated, they're frustrated, they don't understand it, and then they come to me, and then I'm like, well, I have to explain it and try and help, and I do love doing that, and I do love just being there to try and help people in a way that's valuable for them.
So I'm sorry, I didn't mean to step on you.
So it sounds like one of the challenging things is like when people are reaching out to you, it's generally not the most pleasant time in their life.
Most of the time, unless they're coming from somewhere else and they're like, hey, help me out. Like, my rates have gone up, and I'm like, all right, let's go help you,
save money or what have you. But how often, I mean, how much of your life is taking phone calls where somebody's pipes broken in their house or a tree's fallen on something, or, just
the house is on fire.
Yeah.
Yeah, we've had, a few of those, and I would say on average, a third of the time, is what that's about. There's probably a third of it is the claim situations. A third of it is new business coming in the door, and then a third of it is service, or maybe even a fourth of it being service. A lot of it becomes like needing either ID cards or like questions on the policies, or a lot of just answering general questions in regards to claims as well, and what to do.
So
Well,
so 2/3, if a third of it is just addressing like existing customer issues, then that means 2/3 of it is just other things like pricing out policies, helping people find better fits.
I guess I divide it into three categories: one
Mhm.
being claims, one being service, and one being like new business of new clientele.
And how do those three things in your current structure? Because the way I understand it, and educate me here. I'm aware of like three different models in the property casualty insurance business, and actually any insurance. So you've got the captive agency, then you've got the broker model, and then you mentioned a third, which is independent agent.
Independent agent and broker get interchangeable. A lot of times when people will call me a broker, and
Mhm.
typically brokers are the larger of when you refer to a broker, the broker sells to a independent agent a lot of times. So there's companies out there that are brokers to other insurance agents, and the broker works specifically with other independent agents. And then the independent agent is referred to as a broker a lot of times because that's a lot of times what people will refer to know that they have multiple companies. So I am an agent for this company or this company, and Progressive or Grange or
Mhm.
Hartford or Erie. And so I represent all these different companies, and a lot of times that is referred to as a broker. However, brokers are typically selling to the agents themselves, like a middleman, a what's or a master general agency as well, where you can purchase a policy through that, or they're larger, specifically maybe the Nice Lukens or the Assured Partners and so forth, where they are doing a lot of other things in addition to the insurance.
So it sounds like to me that a broker is representing the insurance company, and they're acting almost like a wholesaler.
Yeah.
and then and then you buy from agents or the broker, or I'm sorry, the companies or the broker, and then you represent the client. And because your company or you aren't an employee of a specific insurance company, that's what makes you independent.
Correct. Yeah, exactly.
Yeah.
Yeah.
Okay. Well, so how is that more challenging and different than, let's say, a captive agent? Because I see these Allstate and State Farm everywhere. They're nationwide too. They're all over the place, and I understand these. If the name is on the door, it's probably a captive agency. Is that correct?
Well, I mean, there's plenty of independent agents like myself as co-insurance, or other names on the doors for independents. But you mean the company itself? Yes, But those I feel like are even learning that the independent agent is the way to go. Take, for example, Liberty Mutual.
Hmm.
They now have a different independent where they had their captive agents in the W-2
Yeah.
house. They would only sell Liberty Mutual, and independent agents couldn't sell Liberty Mutual, but they could sell Safeco, which was a subsidiary. Safeco owned Liberty Mutual. Now they have gotten rid of their direct line Liberty Mutual. It's only or direct through the agent. You can only buy Liberty Mutual online. Their agents can now sell Safeco, so they went the other way, and their agents are also selling other policies as well, such as Progressive or a list of different
So
policies.
they're moving into an agency model
Yep.
or independent agent model. Now, are you seeing a lot of insurance companies doing that now?
Yeah, I mean, Nationwide has now switched to independent. All states a captive. State Farm's still captive. I'm trying to think of some of the other ones, but like even Geico, we can sell Geico now.
Mhm.
And it was normally just the direct to consumer.
Well, it sounds like it's a better deal for consumers to go, because I'd rather work with someone who has a lot of different options available. So if it, like, let's imagine hiring a carpenter. and the carpenter only had a hammer versus hiring a carpenter and it's like, well, I've got pneumatic tools, I've got the hammer, I've got the saw, anything you need.
And so just to break this down a little bit here, when you're as a consumer, when you're shopping for insurance, one thing you want to recognize, and we'll just pick on State Farm here, what we're referring to as insurance captives. I mean, these are companies. So if you go to State Farm and you say, hey, I want insurance for my house and my car, my jewelry, whatever the heck it is, they are going to sell you State Farm insurance. There's nothing else they can sell you besides State Farm. And the other side of that is if you go to an independent agent, they can sell you other things, but they can't actually sell you State Farm.
Yeah.
Right. So that's the nuance is like the State Farm guy can't sell you the other stuff, but the other guys can't sell you the State Farm stuff.
That's right.
So the question becomes like, what does that mean for my premiums? What does that mean for the level of coverage I have and how difficult it is going to be able to deal with these insurance companies as I need claims, right? So if I'm a consumer and again, I'll pick on State Farm. Let's say I currently have my insurance through State Farm. Should I feel good about that? Like how should I be feeling?
I think that, yes, there is a place that they are a great company, a great policy. I would feel great because they are a number one auto insurer. Like they definitely are. However, things change. And as they're going, I don't know that they're always going to continue to be that same level of confidence as they move forward. You take the wildfires out in California as well. Like they're going to take a lot of risk and they're a national carrier. So there's also on the level of the independent versus the captive, there's regional carriers versus nationwide carriers.
Right. So like State Farm, for example, is advertising and selling insurance everywhere all across the country versus like I'll pick on locally here in Ohio. We have a company called Erie Insurance, and I believe that's regional to our area. So they're not worried about wildfires in California or flooding in North Carolina.
I would imagine they have reinsurance risk.
Yeah, and that's exactly what the biggest thing for insurance companies with the wildfires right now is the reinsurance, and not to get too much into the weeds on it, but the reinsurance market is really what's affecting a lot of things nationwide, and so some of the carriers regionally may not be affected on a claims level, but they may be affected on a reinsurance level.
Let's take a step back. Let's describe what reinsurance is.
Insurance on the insurance, right?
Yeah.
But there's calculations that go into the reinsurance, and a lot of that has to do with how much, let's say, cash on cash surplus they have as compared to their premium ratios. So when you're looking at how much a company has to buy in reinsurance, it's not necessarily the same across the board. There's each company is a client. And when they're purchasing the reinsurance, the company is specifically looked at in that client where it is like how much cash do they have on hand? So their surplus, and then how much do they want to handle to a certain level? So let's say they want to handle the first $1 million in claims. And then the next $2 million will be handled out of their surplus line, their surplus cash. And then the reinsurance will come in. So a regional carrier, depending on how profitable they are, may be able to buy less insurance, or they might have to buy more reinsurance because of how much cash they actually have. And so that's what's really affecting a lot of things is how profitable those companies are.
So if I hear you right, like even if I'm not insured by a carrier that's marketing or selling insurance in California, my insurance rates are still likely to rise because of all of that.
Partly, yes. And another part is multiple things. I mean, rising costs as everybody is seeing, and insurance is, one piece of it. Everything's increasing, but the price to fix the car, the price to fix the house, the time it takes to do those things also are increasing as well.
Is there anything that's any part of insurance that do we all remember in 2020 when the insurance company started sending you rebates for the fact that you weren't driving? I mean,
I never got one.
Well, I don't know where you were at, but I called my insurance company. I said, "Hey, look, I used to drive 1,000 miles a month because I commuted, and now I'm sitting at my house all day. So I think I remember, and it was State Farm at the time, State Farm issuing me, some kind of refund.
Yeah.
And gosh, we knew that had to be short lived, right? I mean, it's like if you give the discount on the front, does that just make the price increase look bigger on the back?
This is my personal opinion, and I don't, this is no theory or anything, but I actually don't. When you talk about discounts, and I hear that word, and there's certain carriers that really emphasize those discounts. Yeah, I don't like discounts a lot because it usually is like, okay, we're giving you this in the beginning in order to kind of like, get you in the door, and then
promotion.
And a lot of people, honestly, they don't want to pay attention to insurance. I hear this all the time. They want to kind of like know that it's okay and just forget about it because they don't like dealing with it. And when you laugh, or it's funny that say I love insurance, is people don't like insurance. So having somebody that does like it, because it's changing all the time.
Well, so is there ever, I think back to your point with like State Farm's not bad insurance, et cetera, but you might want to look at reassessing periodically because things can change, right? Is there ever a way to set your insurance up where you just never have to look at it? Is that ever a good practice?
Well, so I'll play the devil's advocate a little bit. Let's take the old State Farm policy. So written on an old mutual policy, or you have a lot. I don't do long-term care or anything, but like, let's take a long-term care. You can't get the same policy or a pension. You can't get pensions like a real defined benefit. This is y'all's world, not mine, but like, it's harder to find a company that offers a true pension plan. Some of those State Farm plans that were written 20 years ago are untouchable. Like if I get something like that, it's almost impossible to beat. And they have so many things written into them that they'll never give it anybody. There could be a scenario where that State Farm,
like an open perils policy that includes flood.
Yeah,
something like that.
And you mentioned the North Carolina because that's a lot of exclusions on people, and a lot of people found out. I do, and that's what everybody thinks there's, I don't want to bother the insurance person. And yes, we get a lot of calls and emails. However, like if you don't ask, like you don't know, and we try and send out things, but it just becomes like junk mail at some point. But the flood or the surface water is an exclusion that we can have included on a lot of carriers, and carriers are adding it now. And so adding some of those things back into it, but having those options and knowing what you need and giving the information. People are also scared to give information to the insurance agent because they think it's just going to raise their prices. However, a good independent insurance agent is going to see you as a person and not a premium. That's where I think the difference in any, whether it's a State Farm or an independent agent, it matters, because you call an insurance company on an 800 number. As soon as you say the word claim, you have an open claim that's on your claims history for 5 years. And you call an independent agent, and they're going to talk through what the scenario is and how this is going to affect you and all these different things about what you should or might want to do. Go get an estimate, see how much it is, your deductible is this, and then we can talk about what your options are from there and how it might affect you. That's, one of the greatest things about like being able to just have an agent, period, whether it's captive or independent.
Well, that begs the question then, how do people intelligently review their policies? How do you find a good agent? Because when I look at my declarations pages, I'm probably more knowledgeable than the average person, because I kind of know what I'm looking at. I have to be. But I can tell you, working with the public, most people, they buy the insurance policy and then they put it into the filing cabinet and then they forget about it. And I do want to get your opinion on that, but I do have to say this one thing. One thing that bothers me about insurance, has always bothered me, is it's not inflation adjusted. So, these news stories that are coming out like, $60 billion claim. It's the most claim ever. The world's ending. It's, climate catastrophe. It's like, Yeah, but does anyone think that prices have risen 40% in just 4 years? Like, so that you got no one's thinking about. We're not inflation adjusting the claims.
Yeah.
So so it's all this sensationalization. God, that rolled off my tongue like a brick. Anyway, so I just keep that in mind as you're hearing these eye popping records.
Well, it's the same thing we say when like the news says the Dow was up or down more points than ever.
Yeah,
well, the Dow used to be 4,000 points. Now it's like 40,000.
People don't conceptualize, what is that called? The multiplication of numbers. What is the term for this
Compound?
Yeah, compound interest. They don't conceptualize compounding.
Compounding is, I would say it's very core to what we do. And I think one of the things we've talked about this on the podcast is that it is hard for your brain to kind of it's hard to get your head around just how impactful compounding can be over time, right? You think the difference between a 2% inflation rate and a 3% inflation rate isn't a big deal.
It's huge.
Go run it over 40 years.
Well, anyway, I just wanted to make that point because one of the gripes I have about insurance is that insurance doesn't inflation adjust. Like my homeowner's policy doesn't inflation adjust. My life insurance doesn't inflation adjust. Why can't these insurers figure it out? It's like put an inflation adjuster in it, put a COLA in these things so we don't have to constantly re-up them every year.
They do inflation protection on the homeowner's insurance. Typically 5% is what I see where they increase the dwelling. And what I heard a couple of things and I want to touch on at least 2 things, maybe 3 things that you said. They use it in the homeowner's insurance for inflation protection, but to draw out a little bit more to elaborate on your question, like, do you mean the premiums? Like, why are they not adjusting for the inflation?
No, I'm talking about the coverage limits. Okay. So, obviously the premiums are going to have to go up because you can't have coverage that's inflation adjusted, but the premiums are not inflation adjusted. I believe that there should be an option to buy a COLA adjustment on the policy where the premium does go up by a commensurate amount with the inflation. So let's say like they look at housing replacement costs for housing and those costs have gone up 10% year over year. Well, then your premium is going to go up 10%, So that's kind of how I think the policy should be constructed, but it should be an option anyway.
It is. And most people don't, because that is what drives up majority of the homeowners insurance is the inflation protection. That is the one thing. However, that also drives the other. There's three A, B, and C. So your ABCs of homeowners insurance is A is the dwelling, B is other structures, and C is personal property. The dwelling goes up 5% each year, and it's probably been higher in the last 2 to 3 years. But B coverage is typically a percentage of that A coverage. So, and then C is also a percentage of it. So all those increase, and then you see the premiums increase. But people they equate that like the appraisal cost is what my house is worth. It shouldn't be insured for that much, but the replacement cost is what it's actually costing to rebuild the home. And it doesn't, and that's usually what increases it is the cost of the dwelling.
Yeah. Well, a lot of these people in California, they're talking about, you got the governor of California going out and talking about all these speculators coming in and buying up the land. Well, it's because people have not kept up with their insurance and they're learning now, tragically, that, their house was probably worth $800 million and they only have $500,000. They don't have the money to finish the rebuild their house. So they have to sell.
And the way to make sure that you have that is what's called guaranteed replacement cost. So there's a couple of different types of settlement ways that the insurance company will handle a claim, and typically it's replacement cost, expanded replacement cost, and guaranteed replacement cost. There's also functional replacement cost, which is used on a lot of older homes typically. Or agreed value. Some very few companies do agreed value, but the guaranteed replacement cost technically will have no limit. So there's a lot of companies that are moving towards that guaranteed replacement cost to make sure that those homes are properly insured. And that is the best way to cover your home, is with a guaranteed replacement cost. So
your house could be worth 500,000 on Zillow, 800,000 on Zillow. You have your dwelling insured for the rebuild cost, which let's just say matches the Zillow. But because there's some wildfire and there's 10,000 homes that need to be rebuilt, the price is double. The guaranteed replacement cost will pay double.
If the home, if that home, so you got a 3,000 square foot home and it appraises for $100,000, but it's insured for the replacement cost. You have to justify the replacement cost for what they're insuring it for on the 3,000 square foot. But then let's say today's pricing, it costs $600,000 to rebuild. Okay. But it needs a lot of repairs, and you do all these repairs and everything. The 2 years, it costs $800,000, but you still have it insured for $600,000.
Mm-hmm.
They're still going to pay that $800,000.
They're still going to pay.
So that's what I mean by like an inflation adjuster.
Yep.
So by you can basically have this in a homeowner's policy by having guaranteed replacement cost built in.
Yep.
So back to like there are ways to set up your insurance so that you don't have to revisit it every year.
Yeah.
And you can make sure that you're.
But
still
you have
covered.
to have a good agent that knows this stuff, and that was my first part of the question: is like, how do you find a good agent?
Well, you call me, but 859-694-2284. The other thing I heard all the time was, my car's another year older. I have no claims. And that is actually the opposite. Like the cost of the car is actually going down. Why am I like paying more now? It was a consistent question all the time. Like, why am I continuing to pay more? Well, it's the liability is covering the car that you hit. So that vehicle cost of that other car is going up, and you're covering that car. Majority of it is that. The safety of your car has a lot to do with how much your car costs to insure, more so than actually how much it cost.
Right. The bigger risk on the car insurance is you hitting somebody else and the potential damage you could do to them, not necessarily the $5,000 of damage that you're going to do to your car. Yeah. That's not really what you're paying for.
Correct. Yep.
Well, I'd imagine too, there's an element of variability, because you could hit a Ferrari,
Sure. Well, and you could hit somebody and they could never walk again. I mean, you could have
a bigger one. Yeah.
Yeah. I mean, you could have, and hopefully if you need it, you've got your auto policy set up with an umbrella policy to prevent those kinds of issues. But kind of back to Ben's question though, like if I'm listening to this and I'm trying to think, okay, how do I get started trying to find the right insurance person? How do I know if my insurance person is doing the right things for me? Like what would you say are some of the attributes of like a good insurance person?
I would say they offer the opportunity for you to shop their insurance. They're either actively or wanting you to reach out to them proactively to shop the insurance, not to keep you locked in, not to say, you don't want to move because of this or that, like making less work for themselves. If they actually showing a proactive working, like wanting to do something for you, let us shop it out. Let us see if or if there's a better deal out there for you, hey, go do it. And let's see what that looks like. And you asked Ben a question like, how do I look at my policy and know? Because a lot of people don't understand, and they put it in legalese. So that you almost don't understand, like what's a peril, what's what's subrogation, these terminologies that most people don't. Well, I'm looking at like AI in front of us everywhere. And you can take those policies, stick them into like, hey, what's the difference between this policy and that policy? Just putting it into AI, or what's the exclusions? And that is a lot of times what I tell people. If you want to know what's covered in an insurance policy, read the exclusions. Because
they give you coverage for everything and then they take it back.
So are most policies open peril then, and they just have exclusions? Is that how
These
they
days
work?
it's moving more towards
Yeah.
that. It's moving guaranteed replacement cost and open peril. Open peril for listeners is everything's covered unless it's excluded versus a named peril policy where it's named what is
Nothing's covered unless it's named.
Exactly.
It's kind of the opposite.
Exactly.
And who wants to deal with that?
Nobody.
Yeah, I mean,
Mhm.
the way that it should, it's like I'm buying insurance because I expect to have insurance, unless you specifically tell me that there is something that I don't have insurance for.
Yeah, and I wanna go back to the question about like how people don't think about like compound interest and how much of a difference it makes. And
Mhm.
what was popping into my mind was Nvidia lost record,
$600 billion of market cap yesterday.
right?
Mm-hmm.
And but nobody is looking at how much they've made over the last 2 years, like and a lot of times, and what the way I relate this to and not to say that like I say it's on sale right now if I was me, but I don't know. Like I'm not the investment guy. It's nobody looks at what they have for the last 2 years. They only care about the 10, like they don't care about the 40% they made over the last 5 years. They care about the 10% they lost in the last year or something. And what I've seen with a product that we have called Rate Lock is that exact same thing. And when you think about like something that you can set up that people don't have to worry about, that's the solution for the auto insurance, where if it doesn't change, the rate won't change. So I have policyholders that are with me for 5 years. They have a locked in auto insurance rate. They can have 3 claims and their rate will not increase.
So, and because I experienced this recently because we got a new family car and I was looking at changing, I had to get new insurance. And when I did, the new insurance bill was significantly higher. And I think what I had learned was with Rate Lock, and I'm sure I'm not the only one that gets like a little frustrated with all these like different bells and whistles on the insurance, right? Like you could have Rate Lock or guaranteed replacement costs or open perils, right? I mean, can we just get to the fact that like I want to have simplicity, like I want it to be easy, right? I want to be able to understand it. But your point is that if you had a good agent, back to thinking about your agent being proactive for you, demonstrating that they're working in your best interest, like you mentioned, and then also being thoughtful in the sense that like anybody looking around 3 years ago realized that there was some inflation happening. And I would imagine that as you're putting together auto policies, being the insurance person and knowing what these Rate Lock is and it's kind of your job to tell me what the kinds of things that I should be wanting are in that policy. So your point is I could pay a little bit more starting then, but it allows me so that if insurance rates go up or if I get in an accident or something like that, my premiums are locked in until the point that I change my car.
Yeah.
Right. So that could be really great if you're going to keep your car for 10 years. That could be like really not a great use of your money if you're going to keep it for 6 months. So, but back to the thing. I mean, it's just, how does a consumer, when they get their declarations page, which I don't think a lot of people know that term, by the way, you guys in the insurance world, you throw it around like it's easy, just have them send,
they even call it, they abbreviate, they call it the deck page.
Yeah. And so the insurance guys are always like, just get their deck pages. And then the client is always like, what's a deck page? Can I found some policy documents online.
Can I interject a question here? Does every insurance policy have a declarations page? Or is that just property and casualty?
To think about this. Yeah, I don't think I'm trying to I don't think disability does.
But like property and casualty all has a deck page.
Yeah, there's a declarations page.
Anyway, we can move on.
I never thought about that.
Yeah.
So I'm a client. I just got my renewal notice. Okay. It says, hey, your premium's going up. And I'm frustrated because I don't like spending more money.
Yeah.
And I'm thinking,
out of nowhere,
is my insurance agent doing the right thing? Like, what am I looking for? How should I react in that circumstance?
Yeah. So like on average, I used to say, you'll typically see that inflation will account for 5% of the increase. And you'll see that on average for your home, because inflation on the homeowner's insurance, if nothing else, you want to look at the big swings. Obviously, I've had policyholders that make policies that make no sense on increases with no claims going from $2,000 to $8,000, and I'm like, that doesn't make any
And I assume you shop that.
Of
I mean,
course.
if you're working with an agent that has multiple insurance companies, their reaction in that situation should be, let's go price this out with other companies.
What's the logic behind that? Why would an insurance company?
That insurance
Do
company
that.
specifically was a homeowners only company.
They want out of the risk. They don't want the risk anymore.
I don't know. I can't like that. That one has, when I go in and I look at all my increases on a policyholder just spreadsheet, it comes up, this one company being a homeowners company, they are the highest ones. And I think homeowners has been hit the hardest. A lot of it has to do with the tornadoes, the catastrophes, the raising price of materials. They've really gotten hit on homeowners insurance. Every single carrier. There's carriers that are doing homeowners insurance without the auto. They're looking at like how much loss they've been taking on the homeowners insurance in some certain, not some certain, in every state. It's just across the board.
And is it all natural disasters, or is some of this just people, I mean, when anybody listening here has gone through a storm and somebody has knocked on their door and left them a note that says, we'd like to fix your roof.
I see your shingles sideways. It looks like
we can work with your insurance company.
And that's
right. Like how much of that,
Yeah.
And what's so funny is when I bought my first house, I needed to replace the roof.
Yep.
And I remember I paid for it out of pocket. It was not the most expensive roof. It was pretty manageable. And there were actually people that gave me a hard time and said, why didn't you do that through insurance?
Yeah, that's usually how it's a tricky question, because people do treat it as a maintenance policy somewhat. And therefore I don't know how to handle it sometimes for the consumer, because you are pooled with everybody else. So essentially everybody is paying for everybody's roof.
The good citizens are getting knocked for it one way or another. So it's like you should, if you don't get on the train, you're getting knocked on both ends.
That's what we call moral hazard.
What's interesting is later on, and I won't ask the answer, I talked to somebody who worked as an attorney for one of these insurance companies in their what's called soft fraud department. And I asked him that question directly. I said, how do you guys feel about these people, claiming their roof and getting paid out of the insurance for it? And he literally said, we know it's going on. We don't really police it. It's considered soft fraud. It's not that,
Soft fraud.
Yeah,
I love that term.
I don't really like that, like in reference. Like
That's a show title right there.
Look, and I'm not advocating that you do it. I just found it really interesting that was kind of the societal bias, which like why, you use your home insurance to get the roof replaced. And then even the insurance company, the guy that was, behind it didn't really bug him. And so I looked down at these insurance increases, because when I got my first home and we paid for home insurance, I mean, it was just stupid cheap relative to the price of the house. I think we paid $60 a month or something to insure, $400,000 or $500,000 of rebuild cost on a house. And you do the math on what the ratios are. Like I felt like I was getting a pretty good deal.
Yeah.
And
then all your neighbors started putting up new roofs.
And I paid for my own. So
yeah,
the carriers are having to move away from it because of that. And that's why a lot of them are moving to what's called an actual cash value policy, where it's treated like a car. If it's 10 years old,
which you don't want, right? Because back to your point, you want guaranteed replacement cost.
Typically, yeah, you want to have the whole roof paid for, not just, be stuck with, paying $4,000 of a $10,000 roof.
Because the idea with actual cash, correct me if I'm wrong, but the way the actual cash value would work is if my roof costs $15,000 to put on, but it's 10 years old, let's say it's halfway through its life, you're not going to give me $15,000. You'll give me half of that. The insurance company.
Well, certain carriers will start a schedule at a certain point. In 10 years, it probably wouldn't start that actual cash value schedule right off. But let's say it's 20 years off and that lifespan is shortened. And that way, yes, it's going to give you, let's say $4,000. The roof is $10,000 to replace it. They depreciate it by 40% minus your deductible. So you'll end up
You get
with
like $3,000 towards your roof.
And you got to pay $5,000.
Well, I not to shift up to policies, but this term soft fraud is, I find it very interesting. It's a good term for this, but I think fraud is fraud. Friendly fraud is still fraud.
I don't think that's why I don't like it. I don't think it's fraud. If the policy language says it's going to replace it if there's hail damage, and if there's hail damage.
That where the fraud occurs is when the insurance adjuster comes and there's some cash deals going on, which I know for a fact happens. And they say, oh, that shingle right there, that's definitely storm damage, and that checks the box. So we're going to go ahead and sign off on this. That happens. I know that happens. So another thing that happens, and I've been a victim of this. Actually, I saw it this morning.
I think I know what
there
you're
was
gonna
a
say.
fender bender, and people were out of the car, and the person's like, "Oh, my neck! Oh my gosh, I have to go to the hospital." And people will basically hold insurance companies hostage for medical damages that don't exist. They're fictitious because who can prove that your neck doesn't hurt? You just go to the hospital, and these insurance companies. It's happened to me. So I made the mistake. I'll tell this story, then you can respond to it, because I want to know what should we do when this happens, because it's going to happen. So I was driving behind a UPS truck. It was storm. I was stupid. I was too close to him, and the UPS truck swerves, and because he wasn't paying attention. And then, sure enough, there was a car right in front of him. So I slam on my brakes and I kissed the bumper, and no damage. It was a taxi. So there's scrapes all over it. We pull over into the parking lot, and he looks at it and I look at it, and I'm young. I'm like 20 years old when this happened. And I've been told, always give your insurance info. So he said, no problem. I said, okay, well, here's my insurance information just in case your boss or something like claims it's a scrape or something. That day I get a call from my insurance people saying that he claimed that he had to go to the hospital and there was like $10,000 worth of medical bills, and they paid it. And this guy was perfectly fine. So this is happening.
First of all, what state was it?
It was Ohio. It was here.
Okay.
Yeah.
It's amazing that number 10,000 pops into, just out of nowhere. That's
what he said. I think the insurance company ended up paying out $5,000.
And that's the med pay money. Yeah. Is what it ends up being. So like in Kentucky, there's a $10,000 automatic no fault personal injury. Mm-hmm. So you or passengers in your vehicle, but it comes out of your policy, not like in your car. In Ohio, it's med pay, pays for medical bills. They're ambulance chasers, attorneys, chiropractors. It's like they almost see it as free money because it's automatic.
Kind of built into the legislature.
Yeah, it's like you can't, and that's another reason why insurance rates, again, like it's all part. We're all part of the same pool. It's and so it's kind of hard. Like I don't want to get into politics, but like it's we're part of this nation and part of this pool, and like everybody contributes more or less, and like some people are more greedy, some people are more stingy. It's just hard to be in it all together. And then that's what I have to, when I get those phone calls. Why is my income? Well, because Joe down the street got a roof, and and Bob, so it's like, okay, well, I'm gonna, and then you end up, if you have I always say multiple claims are really what hurt you. One claim doesn't really affect you, multiples will. And those little claims add up a lot of times with carriers because they don't like seeing multiple claims, like towing and just add. And having one claim or two claims, little claims won't really, but then the next one will hit, and then it will be like, oh, that really affects the premium.
Or all of a sudden you get your coverage dropped.
Well, yeah. What should I have done in that situation? Like, are there ways that if you find yourself in a small accident like that, and here, let me summarize what you were saying. Some people are comfortable with committing soft fraud. Other people pay for it.
Yeah.
And that's really it. And it's a lack of ethical structure in the insurance industry. It seems to be the incentives are misaligned. But what should people do to correct that issue? So like I know in that scenario, what I should have done is not given them my insurance information. But obviously that's probably not the like compliant answer. So should you call the police, have them there? Like what are the protocols?
Either way, they'll probably end up getting it one way or another, whether it's through a police report or not. And they're gonna, there's too many attorneys in the world. Be glad that you have an insurance policy that just pays for it and move on. And that's why you have the insurance. A lot of people get hung up on the fact of like, oh, it's just really like bugs me that this guy's getting $5,000 out of my policy.
Why is it a guy?
Or girl, I don't know. This girl.
I'm kidding.
I think you said guy.
I think
a guy. Yeah, it was a guy.
I'm just.
But yeah, the whoever it is, I would just kind of move on. If it was me, like you hit him, he worked the system, I guess, and he got the $5,000.
What should you be doing if you get in an accident?
You definitely should be, making sure everybody's okay first. And if it's a small accident, and that like the other person is at fault, you probably do want to get their insurance information. Let's say you're parked, you're not even in the car. Somebody hits your car in a parking lot, get the insurance. You can file it on the other person's insurance and keep.
How do you prove whose fault it was?
You let the insurance company make that decision. You don't.
Is it a good thing to get a police report?
Yes, it could be. I mean, a lot of times when you get the police report, they're like, you stay in your car, and you'll be able to get the police report in 48 hours or so.
What should you not say?
Should you say sorry?
You want to just make sure that you're safe and that everybody's okay. But like, I wouldn't admit fault necessarily, but I think people get hung up on that. Like, oh, I can't admit fault I can't say anything, but like, just describe the situation as it happened and just be ethical about it. Like, just like, okay, this is what happened. Just say what happened. It doesn't have to be like, oh, I was.
I fully support the, you encouraging people to be ethical. It's just a shame that I think ethical behavior in this industry, you get rolled over, you get screwed. Like, all these people are gaming the system. So I got another, and I'm sorry to really weigh in on this. I hear you saying, just let it go, let the payout go. I can't let this go. It haunts me for my entire life.
See, it's so funny. It wouldn't bother me the way that it bothers you.
It bothers me because I don't like to see people scam and get away with it. There's a lack of justice that just really I find irksome. Now I've sensed like it doesn't really plague me like it used to, but I still look at it and just think, man, that's really irksome, and I don't understand why insurance companies do it. There's got to be an insurance company that like goes to bat and fights against this and just takes a stand and says, you know what, this is one like we want to keep our premiums low for our clients. And
do you know why they don't?
I would like to know.
Because it costs too much in legal fees compared to paying the $5,000.
Those attorneys, man, they got you every way. They got you coming and going.
They look at it from a cost analysis.
Would we rather waste a whole bunch of time litigating or just write a $5,000, $10,000 check?
Yeah, we can move off this, but I do have one more question to button it up, and that is, what do you think about dashboard cams? Are those worthwhile
helpful.
having?
Yeah, absolutely. Very, very. I mean, very helpful. And proving. I had one case where the other guy was saying that it was his fault, but the customer had the dash cam legitimately proved to the other, to the insurance carrier, no, it's your customer's fault. Like, that was a very valuable tool that they had. So I absolutely.
Yeah. So they're useful, but they won't prevent you from being an offender bender. But they just help.
Just highlights the truth, right? And you just hope the truth falls in your favor in that kind of situation, right? But to the other side, it could work. I mean, I don't want to say it could work against you because I don't think the goal is to try to like get somebody else in trouble when it was really your fault. But like it's the dash cam is there so that the truth is easily,
it prevails.
The truth prevails, right?
Yeah.
So, but I want to get back to, and I'm sorry, my scatterbrain self, I kind of go all the way around. But let's get back to like clients that get their renewal notice. Like we talked about you get in an accident, what do you do? But you get your insurance renewal notice. What should you be doing?
I say review your policy at least every 3 years. So contact your agent if it's been at least 3 years and you haven't touched base with them, 3 to 5. You can put it into Chat GPT and say, what are the exclusions? Are there things I should be asking my agent in this policy compared to a XYZ policy, a Geico homeowners insurance that you can use. I don't want to be like AI, but you can ask those things of you or the insurance agent. Like, call the insurance agent if you see an increase above 10%. You definitely need to, I would say nowadays it's probably 15. Used to be 10%, and that's what I was going to go. And like, you on average would expect 5, and if you saw 10, call them. Now, if you see anything about 15, you definitely need to be on the lookout, and that's why we set triggers for anything above 15%. We automatically start shopping.
You call the client, and you start shopping it. So you guys are actively monitoring, your clients' rate increases, and then shopping for them if need be.
Yep.
Okay.
Yeah. And it misses sometimes, but we try to, and that's why it's both. Trying to work.
I'm sure.
on it.
I'm sure you have thousands of clients. So I can imagine systematizing that and trying to make sure that you've got all of that under control is a big. You said a third. Maybe you're missing another third.
Are you seeing agents such as you and insurance companies utilizing any of these AI tools to help facilitate this process?
Yeah, it's everything from super copy and paste to grabbing declarations pages from different companies. You're able to pull in the data.
Mm-hmm.
I was telling you, Ben, on the way in here, just how I can't remember that co-insurance thing and how to calculate it exactly. And I go to an insurance specific AI that is basically has all the certifications. So I can ask it, hey, what's the calculation for co-insurance, or what's not covered on inland marine. And it's been useful, but it's definitely being used more and more, which brings up concerns for me too. Like everybody.
That's a whole nother episode, man.
Yep.
But one question I have on that, in that same vein, is insurance companies, do you foresee them using AI? I can't see how they don't, to like
analytics,
better adjust like risks.
So here's an example. I was doing some research there. The Tesla insurance product, it's actually more, I don't want to say always more affordable, but like, it seems like in general, it's a little less expensive.
If you're a good driver, I'd imagine.
It's a little less expensive if you use it, but Tesla's monitoring everything you do in the car. So they know if you sped through that yellow light, if you slammed on your brakes, or cut somebody off, right? Like, they know all of that, and they're taking that and they're determining your premiums like live in real time, right? So like, how long do we have? I imagine every carrier
they've wanted
is
to for
trying to figure out how to do this.
They've wanted to go to telematic and
telematic.
A lot of the carriers have wanted to go to telematic based insurance. Where in Progressive being one of the leaders in the snapshot and so forth. But as I've seen it play out over the years, nobody wants to have most people don't want to have their driving monitored because they get dinged for it. And
I can't imagine why.
But are they going to have a choice?
I think at some point, no. I think eventually it's going to have to go that way, which I think is a more fair and reasonable way of doing insurance, because
you don't pool everybody together. Back to your point.
Yeah.
Less pools. More pools.
You're more based on your driving and how, instead of your credit score. It's a little better analytics to base the insurance on, because that's what you're doing, is that you're looking at how risky are you of a driver to hit someone else. And as I'm driving up, 75 here, and man, they're zipping around. I'm like, wow, they're nuts over here. Like, it's like that guy, I'm paying for the rate of those for drivers around.
Mistakes.
Yeah, there's no such thing as a red light anymore. It's either pink or yellow,
So the future of insurance, it sounds like, looks like more options. Some of the captive firms are starting to allow their agents to sell other insurance to try to essentially push back on these independent agents that have been more customizable. They've been able to offer their clients more customizable packages. So it seems like the insurance is getting more, I'll call it a la carte as time goes on, right? The other thing that we're, telemetry data and real-time data. And I mean, I know you guys have pictures of roofs and stuff like that now, right? Like what else is where is the insurance industry going? What else is happening that we should think about for the future of insurance?
Well, the insurance is always 5 years behind because they look at 5 years data back, and that's what you're living in right now. I think that as we progress, the independent agent's going to become more vital for people because that relationship will be more valuable than just having the direct to consumer model where you're kind of like trying to wing it and figure it out on your own and continuing to do that. But we as independent agents are the ones that are going to be the best to work with are the ones that are implementing those tools to be able to, let's efficiently make sure that we're looking at your policy every 3 to 5 years. Let's have processes in place using technology or things that might be able to help you look at exclusions and what you might have. Use that data to help the customer, but the trust has to be there.
Is technology ever going to come up with like a one pager that you can send me that just easily spells out what the heck I actually have in all my coverages, like in a way that I can understand?
That's what AI is for, Brent.
But that seems like something that would be but it's so funny, right? We get all these deck pages and I get them too. And I you can look through them and you understand what's not, but wouldn't it just be so great to have an easy one page or some kind of quick summary?
Well, when you look at the summary of, let's say, this podcast, how much does it get wrong when it just types it out? Like, I'm
not saying that AI should do it. I'm saying that, like you said, the insurance agency is some years behind. I see really big areas that need improvement in what you got. The level, from my perspective, when I talk with clients, the level of consumer satisfaction around their property and casualty insurance is like very low, right? And it's almost daunting as an advisor.
They don't care about it.
Well, but it's almost daunting as an advisor because the other thing is, I want to make sure everybody's coverages are right. And of course I want to do it, but then, you've got 20 different insurance people and every insurance, some people are better than others, what have you. And, heaven forbid you run into a situation where somebody that you run into with insurance does a crap job and then a client's mad at you about that. Right. And so kind of back to the beginning, how many of your experiences are like positive? Like I can't even imagine right now you're running a whole lot of quotes where you're saving people bundles of money. A lot of times when you have people shopping, what you're probably doing is showing them that they need better coverage for more money is my guess.
My goal is to get them better coverage for less money because
But how often does that actually happen right now?
I'd say 25%, maybe 30% of the time.
So a third of your time is spent handling people in tough situations, right? Not so fun situations. Another third, 75% of it is maybe having to spend more money, but hey, you get some better coverage. I mean, my point is
I think in this day and age, people don't care. I get on the phone. It's having to put them in that scenario in 5 years if there is a fire or if there is something. Like I thought about it when that earthquake hit last night in, what was it, Delaware or somewhere in East Coast, Maine, I think. I'm like, we don't care. A lot of people don't care earthquake coverage here. But my job is to try and solve problems for people that they don't know. That like insurance isn't meant to like solve problems you had. It's meant to solve problems that you don't even know you have. And
we live on a fault line.
Yeah. It's like, well, I'm like, should we be promoting earthquake insurance? Because you don't think it's going to happen. When it does, do you want it to be there? And that's the question when I ask people what their auto insurance is. What do you want to pay if you're in an accident? Like, it's not necessarily, oh, you mean what's my deductible? Yeah. What do you want to pay? What do you want to have covered if this happens? And so where we're going with everything is, I think people want it simpler. And that company that we were talking about that has large insurance, they made buying insurance very, 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 very simple. I love the way they do it. However, like they're seeing the biggest increase, but they also take care of claims really, really well, which is another pain point for people if they're not getting their claims and having to fight with claims, which is another reason to have an independent agent, is to be able to try and help in those scenarios.
Because, and I want to point this out for folks, I think people don't always understand that
value it.
Maybe value is one thing, but I don't know that they always understand that if you have an independent insurance agent or an insurance agent, that person is not necessarily on the team of the carrier.
Yeah.
So it's really important because there are a lot of people that are nervous about getting sold. So they go to these insurance company or carrier websites and they buy their insurance themselves.
Online, yeah.
They go online and they set it up themselves and they buy it. And correct me if I'm wrong, but I don't think you pay any less to do that versus using a broker.
With Progressive, you pay $50 less, and then after 6 months you lose that, and then we write it.
Sure.
For less.
So it's basically the same price, whether you use a broker or whether you go figure it out on the computer. And I think that, and this is what I coach a lot of my clients on, is like, you want to make sure that, one, your insurance, you want to make sure your insurance guy's not going to submit a claim, like you said, just because you mentioned claim.
Mm-hmm.
I thought it was interesting that you pointed out some people are trying to, get bigger premiums. So it is worth noting that if your insurance person does submit a claim and your premium goes up,
he gets a pay raise.
So long as they keep the business, they get a pay raise, right?
And it's hard. It's actually like harder for somebody to take it from you because you got a claim there.
Because you've got a claim.
Yeah.
So for me, one, you want an insurance person you can trust that, like, I'm going to be able to have a conversation with them if something happens, and they're not going to parrot it to the insurance company. They're going to work with me on my behalf. I don't want to say against the insurance company, but to kind of leverage the insurance the right way. Now, me personally, the other thing that I think talk to a lot of my clients about is, if you have the money, if you have the liquidity available, set your deductibles a little bit higher. Right. I don't think it's, we've had all these conversations, and you can give some context on this, but I am seeing left and right insurance coverage getting dropped, premiums being increased. It sounds great to file an insurance claim because it saves you a little bit of money, but the cost of doing that can be big. And so I think putting yourself in a position where you've got a really low deductible, meaning that the claim for a $2,000 or a $3,000 issue becomes something you think about. I think you want your deductibles to be high enough so you're not motivated to make a claim for a small thing. Like, I think making a $30,000 claim, that's one thing. Making a $500,000 claim, of course. But a $3,000 issue, do you really want to be putting a claim on your record over $3,000? And if you have to, right? I mean, some people don't have the money, and I think that's its own situation. But if you have the money, why would you put yourself in a situation where you have an incentive to make a claim in a low risk situation, low cost situation?
I think you answered your own question about where we're going. I think as you see it, the carriers it used to be that the swings and the deductibles would have a lot more variable in the premium. I haven't seen that over the last 5 to 10 years as much. And I think now there's going to be more of a swing as we go into the next couple of years. Insurance carriers are really going to appreciate the higher deductible because they know people aren't going to use it for the smaller claims a lot of times, because the smaller claims add up for them. But they're, an insurance policy being meant to be used for the catastrophes or the big losses. Your house gets flooded, and you want to make sure that everything is there, and you come home to a devastating, 4 foot of water.
Yep.
You want that covered.
$80,000 of damage or something.
Well, this is exactly what happened in the health insurance business before the ACA came in and just bulldozed everything. Do you remember the move to high deductible policies?
Yeah.
Those were actually, I remember this in like 2004, 5, and 6. Health insurance premiums started to go down, and that skyrocketing effect of health insurance was addressed through the high deductible plan architecture. And then the ACA came in and was like, we're going to get rid of all that. But, the solution.
And then you're all in a pool with everybody else with all the risk.
Anyway,
everybody's. Yeah.
The solution to higher premiums is risk retention.
Yeah.
Because and then that'll push a lot of these like soft fraud issues to the wayside, because then if deductibles are higher, then, there's going to be less soft fraud. But I think we do need to wrap it up. We've been talking about insurance. It's been really good. Sean, you've definitely made a commonly boring subject quite entertaining and fascinating. For our listeners, where can they find more about you and your company? So what's the best way to connect with you?
We always love people going to our website at scoheninsurance.com.
We'll make sure to put that in the show notes along with your name. And
then if you are interested in speaking more, you can reach out to me directly. My direct number is 859-443-5566. If you're interested in getting a quote from one of our agents, you can reach us at 859-694-2284.
Fantastic. Well, thanks for joining us today.
Thank you.
To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. Any company names noted herein are for educational purposes only and not an indication of trading intent or a solicitation of their products or services. Advisors associated with National Wealth Management Group may be either 1. Registered representatives with and securities offered through LPL Financial, member FINRA SIPC, and investment advisor representatives of National Wealth Management Group. Or 2. Solely investment advisor representatives of National Wealth Management Group and not affiliated with LPL Financial. Investment advice offered through National Wealth Management Group, a registered investment advisor and separate entity from LPL Financial.